Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here with Rhylin Bailie of Equinox Gold. Lynn, thank you for coming on the show.
Thanks for having me.
Yes. Okay, go ahead and give us the elevator pitch of Equinox Gold.
We're a growth-focused America's gold producer. We've got 7 operating mines, 1 in Ontario, 1 in California, 1 in Mexico, 4 in Brazil. Our most recent achievement was achieving gold production at our new Greenstone Mine in Ontario. So we poured first gold in May on schedule, achieved commercial production at the end of October, and now we're focused on ramping that mine up to production. When it's at capacity, it'll be 390,000 ounces of gold per year, which makes it one of Canada's largest gold mines, also one of Canada's largest highest grade open pit gold mines. So it's full speed ahead at Greenstone, and that's going to be the real catalyst for our company this year.
Okay, and what is your market cap, cash, and debt?
Cash at the end of the year was $240 million. Debt was $1.2 billion right now. And our focus with Greenstone production and all the cash flow that we're going to get from that new mine is to pay down debt. So we're very focused on paying down the debt. We took $180 million off the balance sheet in Q4 of last year, continue paying it down this year and next, with the target of being less than a 1x debt to EBITDA ratio in 2026. And what was your other question?
Market cap, cash.
Market cap, we're about $3.5–4 billion Canadian, depending on the day.
Okay. And so the debt that you took on, what was that for?
We've been building the company. So we're a very new company. We started at the end of December 2017. So in 7 years, we've grown from a single asset developer to a diversified producer with 7 operating gold mines. We've done that by acquisition. So we bought 1 mine, bought 2 companies, and we've also built 4 new mines. So we built 2 mines in two mines in Brazil, 1 mine in California, and then our new Greenstone Mine in Ontario, Canada. So it's been a really big growth period. We use debt as one of the funding methods to be able to get through that. Now the M&A is behind us, the growth's behind us. We've got all the projects in our portfolio that we need to achieve our vision of being a 1 million ounce a year gold producer. And with all the cash flow that's coming at these gold prices, and with 7 operating mines, we can start parking that cash flow onto our revolver and other debt and get that paid down.
Okay. Tell us more about the Greenstone Mine.
That's been a labor of love. So we started construction at Greenstone in October 2021. We managed to build that project on time and mostly on budget, which is an incredible achievement for the team in an inflationary environment. It took us almost 3 years, which is what we had planned. But if you look at our share price, you'll see that it's been pretty suppressed over the last 3 years. And that's because the market had concerns that maybe there would be schedule overruns at Greenstone or cost overruns. So we managed to build that project on time. It's in production. The ramp up's going really well. And as we get, like I said, when we get it up to capacity, we're talking 390,000 ounces of gold a year, very low cost producer. All-in sustaining cost should be about $1,000 an ounce. So if you look at $2,700 gold, those are pretty exceptional margins, great cash flow, and that's what's going to let us start to pay down the debt.
Okay, and what are the reserves on Greenstone?
Greenstone on its own is 5.7 million. From a consolidated basis, the company has 20 million ounces of reserves, 18 million ounces of M&I resources. So we've got a very large gold endowment. We produced 621,000 ounces of gold in 2024. And now we're going to see that come up this year with Greenstone ramping up, and then a modest growth again in 2026, all just from Greenstone. And then we've got 3 other expansion projects in the portfolio that could collectively bring another 350,000 ounces of gold production per year over the next few years as we advance those projects.
Okay. Tell us about Los Filos down in Mexico.
Los Filos is a great asset. Unfortunately, it's had its complications. It produced 170,000 ounces in 2024, which is one of its best years. What it's going to produce in 2025 is a question mark, because we're in the middle of renegotiating those community agreements. We need to get those recast for today's economic environment. If we can't get those community agreements done, we're unfortunately going to have to shut that mine down. So it has the potential to be a fantastic asset. We've got a big expansion project there that we'd like to do to get it up closer to 300,000 ounces of production per year. But we can't do that until those community agreements are complete and until they make sense for today's economic environment. So we're hopeful that we'll get it done. We can't get it done, we'll have to shut it down. So that's a bit of a question mark in the portfolio right now. Is Filos in or is Filos out?
Yeah, okay. And is that open pit underground or both?
Both.
It's both, okay. And that's got about 5 million ounces of reserves?
Plus another 7 million, I think, in resources. It's a big asset, lots of exploration upside, but it's been certainly our most complicated asset to operate.
Yeah, okay. All right, tell us about Aurizona. Am I pronouncing that right?
So Aurizona is the first mine that we built. We built that one in 2019. It was a sort of a company builder for us. It's been a great asset. It's an open pit mine in Brazil. We are doing an underground expansion that we've been working on for a couple of years. We're going to start the underground portal development this year. So Arizona normally produces about 100,000 ounces a year. With the underground development, it should get up closer to 140 and extend the mine life. And the underground, I mean, I'm not a geologist, but the geologists say that underground deposit goes forever. So with the underground, it's about a 10-year mine life, but I think there's great potential for that to continue to operate for many, many years. And then we've got this big land package with additional open pit deposits that are close to the mine, lots of other deposits in the region. We've got 1,000 square kilometers there. So longer term, probably not in my working lifetime, but Arizona could actually be a mining camp. So it's really our flagship asset in Brazil.
Oh, all right. And reserves there is 1.5, 2 million. Okay. All right. That's an authentic answer. All right. Tell us Castle Mountain.
So Castle Mountains are other exciting projects that we're working on. It's an asset that we bought, and it was part of what formed the company. We did a three-way merger in 2017 with Newcastle, Anfield, and Trek Mining. Newcastle owned the Castle Mountain deposit. We put it into operation for a few years as a phase one operation, just to show that we were, a good corporate citizen and operating mine while we got the permits underway for the phase two. So phase two is what we're really working toward. It's going to increase production from 20,000 ounces a year to 220,000 ounces a year. Again, a long life, 14-year mine life, low cost operation. So we're in the permitting phase now for phase two, hoping to get those maybe around the end of 2026. It's about an 18-month build. And then we'll have this another big chunky, asset in a fantastic jurisdiction. It's like a mini Greenstone.
Okay.
That's a few years down the road.
And where's it located?
It's in California.
Okay. Not friendly according to the Fraser Institute.
Well, but that depends on your circumstances. So our Mesquite mine in California has been operating since 1986. Castle Mountain had been in operations historically. It was shut down and reclaimed. We bought it. We put it back into operation. So if you have permits, if you're an existing operating mine, totally different ballgame than if you're trying to permit something from grassroots. So that's why we had phase one in operation, so that when we applied for the phase two permit, we were an operating entity, and that makes it a very different scenario. And Donald Trump just tweeted that if anybody's got, getting invested $1 billion in California, full speed ahead for permitting. So maybe he'll help us.
Okay. Well, that can't hurt. Okay. Let's see. We hit on Mesquite. Tell us about your team at Equinox and the experience that you guys have.
Well, we'll start with Ross. So Ross Beatty is our chairman and our largest shareholder. Ross, I think, needs no introduction. He's one of the most successful mining entrepreneurs in the business. He's also an incredibly amazing person. It's worth Googling him. He's a philanthropist. He's an environmentalist at heart who also happens to be a very successful geologist. So Ross is sort of the visionary of the company. Greg Smith is our CEO. He was president for a number of years, took on the CEO role a couple of years ago. I've been in the industry since 1995. I started at Placer Dome. There's a lot of people who have been in the industry a long time, and we're just really excited about what we're building. Like, you see so many people who come to work because of the paycheck. I think most of us come to work because we are really excited about what we're building, which is a profitable, sustainable gold company that's going to be held up as a world-class company, how everybody should run their business, and it'll be a legacy for our team.
Okay. All right. And who owns the company? What's the breakdown? Any vested partners?
No partners. We own 100% of all of our assets. At this point, we're about 80% institutional ownership. It's about 50, well, not 50-50, but mostly in the States, Canada, some in Europe, some in South America, some in Australasia, but 80% institutional. And then insiders themselves own almost 7%. So most of that is Ross. He's our largest individual shareholder. I think he's at 6.3% now. And then all of the executives, directors, and management team have put our own money into this company. We think like owners. We're very aligned with our shareholders. So at 6.6% insider ownership, that's one of the best in the industry. And then we've got a lot of retail high net worth investors that are in the stock as well.
Okay, so what percentage of that is available to retail? What percentage of the company?
Well, 80% institutional, 13%, I guess, is retail. Yeah. We got pretty good liquidity. We trade a lot. We are traded on the Toronto Stock Exchange and the NYSE American under ticker symbol EQX. Some days we trade 10 million shares on each of them. Some days it's 1.5 million to 2 million. So lots of ups and downs. That's the joys of being in the mining industry.
Yes. Okay. So you got big target size. What draws me to it is the liquidity. So for myself and my followers, it's real easy, buy and sell. We can do market orders, which is rare in this room.
Yeah, you're always going to be able to get in and out of the stock.
Yeah. And as far as the size of the prize, you guys have 19 or 20, if I'm adding correctly, in reserves across all the mines.
2 million in reserves, 18 million in M&I resources.
Okay.
I think what really sets us apart is the growth profile. So we did 621,000 ounces in change in 2024. We've got the portfolio in place to be able to almost double that over the next few years with Castle Mountain, Filos, and Arizona. But Greenstone on its own is going to add 280,000 ounces of additional production compared to what it did in 2024. So 2024 it had half a year of production. When it ramped up to capacity, Greenstone's going to be at 390,000. So just that mine alone is going to add extraordinary growth in 2025 and again in 2026. Increase production, increase cash flow, decrease costs, pay down the debt. We've got so many catalysts coming just this year. And then the gold price is the cherry on top of that, right? If the gold price rises, we rise because we've got exceptional leverage to gold.
Yeah. Okay. What is the biggest unanswered question facing Equinox today?
Los Filos. So how do those Los Filos negotiations turn out? Are we going to be operating the mine and doing the expansion, or are we going to have to shut it down? That's the question I can't answer today. Yeah. But even if we can't operate the mine, right now, Filos, it's a big producer, but it's also our highest cost mine. So we'll lose the production, but it'll also bring our consolidated costs down, which is not a bad thing.
That's a good reframe. Okay. What could go wrong?
Well, we just have to get the agreements done. We've got 3 communities there, and we're trying to negotiate as a partnership so that if the mine does well, everybody does well. If the mine does less well, everybody takes a little bit less. But we're trying to renegotiate these agreements so we can operate the mine effectively and economically, hopefully for decades. Right now, with the cost structure, Filos all-in sustaining costs are like $2,200 an ounce. So it's making money now, but it wasn't for the last 2 years and earlier this year. And it's just not, and we've got all these hiring restrictions. So it's just not, we're not able to operate our business there effectively with how those agreements are currently crafted. We're just trying to right size them, make them more normal to what they see in the mining industry, still bringing in an incredible amount of benefits to the communities with scholarships and healthcare and jobs and all these things, right? They're still going to get an incredible amount of benefit, but hopefully for a much longer time frame, because an economic mine, now we can invest in it, we can do the expansion, and it's just going to mean more for everybody for much longer instead of this mine that is not able to operate as a profitable standalone business unit.
Yeah. Okay. Okay. All right. Well, thank you very much. I appreciate your candor. And if people want to follow Equinox and get a hold of you, how do they do so?
Well, our website is equinoxgold.com. Like I said, we're traded on the Toronto Stock Exchange and the NYSE American under ticker symbol EQX. My email address and all of our contact details are at the footer of every single page on the website. So please do get in touch. And thanks for the opportunity.
All right. Thank you, Ryan. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.